The North African region is the only region predicted to suffer low growth in 2011 year-on-year on the continent. You're forecasting growth slowing sharply to 0.7% in 2011 from 4.6% last year. Let's start with your support loan to the Tunisian economy, $500 million. This is part of a broader support program. Could you just elaborate on whether this is going to be enough to kickstart that economy?
Yes, hello there first. Yes, indeed, $500 million is coming along with a similar loan from the World Bank and from 2 European donors amounting to all in all $1.4 billion. And that is indeed to help kickstart the Tunisian economy and help the government and the population of Tunisia to go through a difficult transition from autocracy, if you want, from a revolution that obviously had certain impacts, negative impacts on the economic and social fabric of the country, to help the country and its people to go through that moment towards, if you want, brighter futures, where you will have a situation where with economic, social, and hopefully political inclusion, where you will have a country that, freed of the reins and the impositions of if you want, a predatorily corrupt regime, will be able to grow at a faster pace than it did before. So yes, indeed, that is what it's for.
In terms of the amount of the loan, the total support program at the moment stands at, as you say, $1.4 billion. Now, if you look at how large the economy is, $100 billion, as I say, is this enough at this stage to get that economy going, and will more money be needed further down the line?
I think it's a very great impulse for the economy at this stage. And by the way, these are obviously not the only things that will get the Tunisian economy going. The most important things are the ones that the Tunisian government and its people will affect themselves. That is, to rebuild an environment and a climate where domestic and foreign investors are willing to come back in and invest in the future of Tunisia, where people are willing to, if you want, to make short-term sacrifice for the longer good, and where private entrepreneurs are opening up their factories again and starting to both employ people and produce. But indeed, we are prepared to provide more support. We expect to have another $500 million coming from the from the African Development Bank alone, plus support from other multilateral institutions and bilateral donors. So there would be easily another $1 billion to $1.5 billion coming into the Tunisian economy from official multilateral and bilateral donors alone. And here on top of that, you have a number of other actors, including investors, commercial banks, investment banks, etc.
What about getting those investors to start investing again in the rebuilding of the economy? What is it going to take for them to start looking at Tunisia as a place where they want to put their money, and what are the risks attached to it at this stage?
Well, I think there are a number of risks, and some of them we're already going through, I think, with style and with manners. Basically, you could break it down to three types of risks. There's a security risk, there's a social political risk, and there's an economic risk. The security risk, I believe at this stage, compared to 5 months ago, right after the revolution, I think the security risks in Tunisia are coming back to normal levels. Not the levels that you had before under Ben Ali, because they were artificially low, but somewhere between Denmark and the UK in terms of personal security. Secondly, in terms of the social political security, or risk if you want, there you have a situation where the world is waiting for elections in Tunisia. They will take place. Maybe they won't take place the 24th of July, although the government has confirmed that most recently. But this is really a technical issue where you need to get in place the whole apparatus to ensure that the new voices of Tunisia are heard at a political level. So I would say for now, the government, the transition government, is handling that risk very, very adeptly. Then there's the economic risk, which to an extent has some built-in self-reinforcing mechanisms. For now, I think we're still sort of hovering where investors remain sitting on the fence. I think within the next 6 months, you will see the confluence of both the social, political, the security and the economic factors will enable investors and bankers to feel comfortable and return to Tunisia.
Let's look at the Libyan economy. Conflict still raging on there after 4 months. That economy has been severely affected by that conflict. What is the bank's interaction with the government at this stage? Does it have any interaction there? And do you intend to offer a similar loan to Libya?
At this stage, we have no contact with the Libyan authorities. It is a country at war with itself, civil war. We are sitting outside, right next door, observing and monitoring very carefully what's going on. We will be ready, the moment the war has come to an end, we will be ready as a multilateral development bank, as the continent's, the African continent's premier financial institution. We will be ready to go in and support Libya. However, the big difference between Libya and Tunisia, if you want to break it down very simply, is that in Libya you will find yourself with a country which has an enormous need to build the essential fabrics of a functioning economic, social and political society, which is not the case in Tunisia. However, you also find yourself with a country that has about $250 billion in the bank, plus 1.6 million barrels of petroleum flowing every day, the biggest oil reserves on the African continent, and the third biggest production before the war. So that's an enormous asset for a country that obviously will face enormous needs. The needs, in my view, will be less financial, because Libya will be able to foot the bill, but it will be on capacity building, it will be on technical assistance, it will be to rebuild and build, in some cases, all the pillars and the tissue of a society.
Jacob, I'd like to just change focus slightly. In the annual report, you mentioned the fast-evolving relationship that BRICS economies have with the North African regions, and this is likely to be a potential game changer. Can you just elaborate on what is meant by that?
I believe the BRICS, and the BRICS is now with a big S because South Africa is part of the BRICS now. The BRICS have been a game changer for Africa at large. And the past 5 to 8 years, we have seen the BRICS moving in on North Africa, and I think it's absolutely a game changer. It has already been. The reason North Africa weathered, if you want, the global financial crisis and subsequently the Euro crisis relatively well was in part because investments kept flowing in from the BRICS and exports kept going to the BRICS. So they have already shown themselves as viable alternatives to the traditional trading and investment and commercial partners. Looking forward, I think it's very clear that North Africa has something very particular to offer. It is a beachhead to Europe. You have the biggest consumer market in the world lying less than 100 miles across the water that's easily navigated. The Chinese, the South Africans, the Indians, the Russians, the Brazilians, the Turks, the South Koreans have all seen that, have all started to invest in production entities that, for the large part, export directly to Europe. I think once you have a situation where you have economic, social, and political governance in North Africa that actually is conducive to business, you will see the real influence of the BRICS, including South Africa, in North Africa.